Seb Loewensteijn from the CEFC. Sebastian is an associate director in the portfolio management team at the Clean Energy Finance Corporation, providing specialist sustainability advice. This includes creating and monitoring clean energy targets, particularly the CEFC's commercial property and infrastructure investments across energy efficiency, low emissions, and renewable energy technologies. Sebastian previously worked at WSP as a sustainability consultant and in the architecture practice, whereby gaining a wealth of applicable expertise for our investments. Sebastian has a bachelor's degree from Ara Institute of Canterbury, a Master of Science from the University of East London. Sebastian is presenting to us remotely online. So Seb, I'm happy to click next for you when you're ready.
Yeah, fantastic. Thanks, Jeff, and thanks for the opportunity and introduction. Jump onto the next slide, please. So at the CEFC, we've got the unique mission of accelerating the decarbonisation of the economy, and we invest in across all gamuts of the economy, and we lead the market essentially to really drive impact where difficult to decarbonise areas are. Jump onto the next slide, please. So we've got essentially 4 key pathways for decarbonisation. We look towards the grid, which is a system-wide change that kind of needs to happen. We've got sustainable economy. We've got biosequestration, where we're looking at impact capital, recycling, soil carbon as well. But the piece that I'm going to focus on today is the built environment, and specifically around infrastructure and property. And it's through this particular lens that we're beginning to see upfront carbon in Scope 3 really coming into play. Scope 1 and 2 for assets, we've been setting targets of net zero since 2016, and we've seen people realise those targets already in 2022 with advancements of clean energy procurement contracts. Jump onto the next slide, please. So when we're looking to invest, we always look to set ambitious targets and get emissions reductions. And we always seek to get additional private capital to invest alongside us. So we're crowding in funding. And we also are looking to get risk-adjusted returns. And one of the positive things that we're kind of seeing now is much closer scrutiny from investors around TCFD and climate risk. Jump onto the next slide, please. And so why are we looking at climate risk and net zero? So what we've got up here on the slide is TCFD, which was established by the Financial Stability Board as part of an approach to provide harmonised recommendations and guidelines to how financiers can begin to measure what the climate value at risk is. Now, in Australia, we've seen in 2019, we saw the Australian Institute of Company Directors put on fiduciary obligation. Then we've seen ASIC, APRA, the ASX also put on requirements in relation to what those reporting requirements are in relation to climate risk. And then what we've seen recently is that we've got investors and insurance looking at financed emissions under the PCAF standard, the Partnership for Carbon Accounting Financials. So this is what's been happening since 2017. At the same time, the Clean Energy Finance Corporation, we've been investing to lead the market. And early on, we invested in AMP with pretty ambitious net zero targets. But then not long after, we invested in Lend-Lease's Prime Office Fund, and they set more ambitious targets and looking to include Scope 3. And so what we've been doing is going from property, investing in Scope 1 and 2, and then eventually we'll get another partner in and we'll look to do Scope 3. We've done that with property, infrastructure, and we're looking to do this as well in the private equity space. So we're seeing a huge shift in that regard as well. Then whilst we've been doing that, we also saw in 2019 an opportunity that needed to be taken, which was in relation to embodied carbon. And we saw that there was available through the GBCA and Infrastructure Sustainability Council, a wealth of knowledge that we could use to put together a report around what the potential opportunity is for infrastructure and property projects, and that's available just direct via our website. And we launched that only in 2021 in November. On to the next slide, please. So in terms of sustainability and ESG at the CEFC, we've got a best-in-class ESG policy. The bit I'd just like to focus on here is it's core in the CEFC's mandate to do decarbonisation. So we're always doing impact projects. But the area that, that's really coming into life, which we've got now as an ESG priority factor, is climate risk. We'll jump on to the next slide, please. And then acknowledging that we've got climate risk, what we've seen also is investors moving towards not only what is being your carbon abatement, but what are your financed emissions? So when we go in to invest in a 50,000 square metre office tower, what's the emissions that we are investing when we're doing a debt transaction? And we're starting to ask for that. So we're starting to ask for, we're getting scope 1 and 2 emissions reporting, and we're starting to ask for scope 3. And how PCAF fits in is that then you've also got science-based targets, which then clips into it to demonstrate how they're being achieved. And offsetting is not part of that equation with science-based targets. On to the next slide, please. So just in basics, how does it work? Well, essentially it's an ownership structure. So within whatever, if we're talking about fund that we own, we might have a 1% share in Lend-Lease, for example, and then we would be able to figure out what our ownership of those emissions are. And what we've got at the bottom of the page as part of the standard, they're also looking at progressively building out those scope 3 pathways, and we're starting to ask that in our investments, and we're leading the way by doing as impactful as we possibly can, which I'll come to a little later. On to the next slide. And what's interesting from a financier's perspective is that we've got, within a year, this has jumped from about 120 to 240 financial institutions representing $66 trillion. And we've got just last year, the big 4 banks in Australia signing up as well. On to the next slide. So when we're taking into consideration, we've got the PCAF, the financed emissions, and as well, we've got TCFD and climate risk and reporting. We're continuing to lead the way. And I've got some examples just up here on screen about our journey. Early on, investing in 2017 in Moorebank Logistic Park with Cube to drive low embodied carbon targets. And then more recently, we did an investment with Hesperia in West Australia, where we saw a 42% reduction across the concrete mixes. We also then launched our industry report, which has been well received in November 2021. And then recently, we've also, through our property platform, we've established a timber $300 million program. So, yep, that's pretty much it from me. Jump on to the next slide. I'll just cover off one more comment. This is just an appendix, but look, there's mounting pressure and regulatory demand, and it means that from our perspective that this particular decade is the decade of scope 3 decarbonisation, and that includes upfront carbon, which is embodied in materials and construction, but also the tenant users and services of a process as well. Thanks, Jeff. That was it from me. Hand it back to you.